Welcome back. Let's look at the coming week and look for interesting opportunities. So first off, read this disclaimer carefully. So we start here by looking at the S&P 500. It corrected, down to that purple 20-week moving average. Now it's on a rally, trying to get up to those highs. So let's look a bit here at the seasonality for the SPY. Yeah, in the table view here, you can see that May is actually a pretty bullish month. So, yeah, definitively more bullish than bearish. June is more bearish. So it's possible that there could be some shorting opportunities for the SPY as we approach June, but currently it's sort of like there's no like bullish or bearish trigger. Here is AT&T. Yeah, the blue 100-week moving average here, it's interesting, but it's not currently, it's not a clean indicator given that we have been like chopping through it before. On the dailies, yeah, it's a bit too noisy. The TLT, the 20-year Treasury bond ETF, yeah, on the weeklies, on the dailies, this one is also a bit sort of noisy. There's no like clean trigger. Let's look at the VIX, the volatility index. So the VIX is really, really low. It's actually, on the weeklies here, it's at a support level. So there's very little fear in the market. So far, VIX is definitively the most interesting opportunity. So if we look here a bit at the seasonality for the VIX, to the left, there's a bit of a tendency of a spike into mid-ish May. Table view. May, if you look here at the sum, looking at the sum for May, May is actually a fairly decent month for the VIX. So a month where we could see some spike due to people buying that insurance. So I will put VIX here now. VIX is definitively one to watch. Let's look at gold while we are at it. Gold looks very similar frankly to the S&P 500, which is a bit weird, bit of a strange pattern where they match, but you see, because here is gold, right, and here is S&P 500. Yeah, quite strange. But yeah, gold's been on a run. Yeah, I'm long-term definitively bullish on gold, but we are not like at these cheap lows for gold yet anymore. Let's look at China. Yeah, China, nice rally here in China. Might getting a bit pushed on the RSI, on the weeklies, on the dailies. On the dailies, pretty pushed here on the SPY. No, the FXI. Yeah, what other things should we look at? Yeah, let's look a bit at crude oil. Maybe on the dailies. Yeah, on the dailies we do have maybe we have a trigger. So you can see here, if we go back, this blue 100-day moving average, it's been a fairly clean one to trade. If we look at the more recent developments here on the daily, it's been sort of not that clean. So if you were to buy crude oil on that indicator, basically as your thesis, you would have to accept a bit of potential wick below it. So I think all things considered, it seems like the VIX is actually the cleanest one now. Yes. So let's do a bit of a deep dive on the VIX. So on the weeklies, if you look here at this red dotted line, it shows that we are at a very key support level. Like you can go really far back, and this is still a really, really interesting level to be bullish on, right? Its support, so bullish makes sense if you look at these other indicators. Interesting level here on RSI. You see the dotted line there as well. If we go here to dailies, we are at the support level on RSI. We are not at like oversold levels, but very low. On the purple PPO, which is the distance between price and the 20 daily moving average support, a support level. So in my notes, we definitively have horizontal support. The great thing about horizontal support is that it's very easy to find out whether you are wrong or not. So you can have a pretty tight stop loss level. So yeah, okay. So the seasonality on the dailies, some strength into May here. Yeah, overall it's a bullish month for the VIX. June is pretty good as well, so the seasonality here is promising. So when it comes to the seasonality, I think one could give the bulls, yeah, I think we can give them a bit of a 5 here. Pretty good. Fundamentals doesn't really make sense for the VIX. Now let's do some, here we can actually see some of the optionality. So implied volatility is pretty high. Okay, so let's look at correlations. So VIX. Okay, like that. And we compare it with this one. Let's also compare it against gold. Another fair trade. And we could also compare it against Bitcoin, even though Bitcoin has not shown itself to be like a fair trade. Okay, so here's the VIX. Minus 64% correlation with S&P 500. So they do move broadly opposite each other. Minus 51% with gold, minus 32% with Bitcoin long term. Short term, we have minus 47% with S&P 500, minus 10% with gold, and minus 25% with Bitcoin. So trading the VIX, just buying the VIX, of course, is a bit of an issue. One option is to buy the UVXI. So I have now added the UVXI and the VXX. Those are the two ETFs, and also an ETN that enables you to get exposure to the VIX. So you do see that there's a 39% long-term correlation with UVXI, 58% positive with VXX, daily 71% with both. But overall, it seems like the VXX is a bit better at tracking the VIX. So yeah, this could be an option. Let's now look a bit at relative performance. So we go here and we take the VIX and compare it against the S&P 500. So looking here at the weeklies, we are at a bit of a support-ish level here on the RSI. We are really low actually here. Really low wicks historically speaking. On the dailies, key support here on the daily RSI level indicator, that is. Looking at the seasonality here for the pair. Usually see a bit of a spike in the wicks, strengthening into mid-May. In the table view, you do see that May is, it can be bullish for the wicks, but June is the more clean, bullish month. So when it comes to relative performance, yeah, I think it's a 5 there as well. You do have that key support. So to sum up, when it comes to the VIX, we are at horizontal support, and the VIX, the fair index, it's a way to get insurance in the market. What can be more challenging is to actually get exposure to the VIX. We did see that the VXX ETF, ETN it's a decent way to get exposure to the VIX, but there are tracking errors. just investing directly in the VIX is not as accessible, right? So I do think that the VXX could be an interesting way to trade the VIX with the bullish thesis. Of course, given that there is a negative correlation between the VIX and the S&P 500, one could also just go bearish on the S&P 500 as a proxy way to bet on an increase in the VIX. Whatever you do want to, let the trend be your friend, and also operate with some theses where you can have a pretty clean exit plan. And here with the VIX, given that we are at support, we do expect the move to happen in the pretty near future. So we will quickly know whether this one pans out or not. What I will do in my own account, I will most likely put on some bearish thesis on the S&P 500. I think I will sell a call vertical on the SPY. Maybe going out into June, maybe July to benefit from the time decay of option. And that trade will also benefit from an increase in the VIX. The S&P is of course really, really high. Of course, you have to be careful about fighting the market. You also need to think about the long-term odds. Given the abnormal strength of the SPY, there definitively is the risk of a more swift move into other assets if we do see the SPY get a bit more cheeky, and also show more clearly tendencies to want to correct and to see a bit of a repricing of the US stock market. So if you want more intel, you just go to diamondarm.com, and that is where I will publish a bunch of stuff going forward. We'll be making some courses and other types of goodies.